Hello everyone, welcome to my YouTube channel. Today I'm going to talk about how to handle cash or bank related GLs in document splitting. So let us understand what is the meaning of document splitting. Document splitting. So document splitting is the feature which is available in New GL as well as in HANA. So document splitting helps to provide the financial statement at business area level as well as at profit center level. So in case if you want, in addition to your company code label, for example, anyway you are preparing your financial statement at company code label, but other than company code label, if you still want few more financial statement to be generated, then you can use document splitting, and you can use in that either a profit center level or business area level you can prepare the financial statements. So why this splitting required, let us understand that we have is activated your document splitting. Activated document splitting. First we split for the company code level. Now I want my financial statement at profit center level also. Profit center level. So what is the active splitting? So for example, you have two expenses. You have been learning this. So there is nothing new. Expense one, and I am posting 1000 rupees. And here I am posting cost center one, and in this I have assigned profit center one. I have another expenses two, here 2000 rupees. Here I am booking to another cost center which is having another profit center. Then to vendor account 3000 rupees. Now if I want to pull my financial statement at company code level, it is matching. But if I want to pull my financial statement profit center one level, then I have debit balance but I don't have credit balance, because in vendor I don't know how much belongs to the profit center one. So I have to split this vendor into two, one for profit center one and one other for profit center two. So this will become, after active splitting, this entry will become like this. To vendor, it will become 1000 rupees. How this 1000 will come? So it will, based on this ratio, this 3000 will be divided. So like 3000 divided by this plus this, okay, and multiplied by, so let's put it this way. 3000 is here, so this plus this will come 3000 multiplied by this individual amount 1000. So this much amount will come 2000, and here it will become PC1 and PC2. So this vendor line item is getting splitted in PC1 and PC2. Now for PC1 I have 1000 debit and PC1 I have 1000 credit. Now my statement or my debit credit matching at the profit center level. So this is known as a active splitting. Okay, this is known as a, so during the document entering time, whatever splitting happened, that is known as a splitting. Now during the payment, I'm making payment. So two line item, if you go, after posting this one, if you go and see in the vendor line item, you will not find two line item. It will still show only one line item with 3000 rupees. So when I make the payment, what will happen? Vendor one 1000 rupees with PC1, vendor account debit, vendor account debit 2000 rupees on PC2. Now to bank. Now this bank will be 3000. Okay. Then what is the PC of this 3000? Either it will pick PC1, PC2, or it will pick both. Okay. So some client will ask you to split this bank based on the this profit center, based on the vendor profit center. So during the invoice posting time, you have in 1000 line item have PC1, in vendor 2000 line item have PC2. So this should also get splitted like 1000 rupees for PC1 to bank. I'm not going in depth. I will tell what I'm trying to teach today. 2000 for PC2. Okay. Now this bank line item will get split in two line item. So now at profit center one level you have this much, at profit center one credit line item you have. So some client will ask you, and this is not a passive splitting. Passive splitting. Okay. Some client will ask you to go in this way passive splitting. They'll ask you to split your bank GL based on your vendor line items. Okay, or based on your active splitting. So this is based on active splitting. You want to split the bank line item. This is one kind of requirement. Scenario one. Especially for bank, I'm talking right now bank. Scenario one. Another scenario two. Scenario two. Sometimes they don't want to put the profit center based on the vendor. Client will give you their own profit center for the bank GLs. Okay, client will give you their own profit center for each bank GL or whatever GL they want to default for particular profit centers. That time splitting will not work, and at profit center level it will not match. For example, here vendor PC1, PC2, but here they have given like PC3. Client will give. So here, okay, let us not disturb that one. So here, for example, vendor account debit. Okay, vendor account debit. Here they given 1000 rupees. Here 2000 rupees. Here based on your invoice, it is picking PC1, PC2. Okay, but to bank, they don't want in this way splitting, but rather they will give some PC3. Okay. So here PC1, PC2, PC3 level it is not matching. Okay. Some client will be okay for this, for bank and cash GL. Some client will tell scenario 3, some client will tell that I want my profit center to be defaulted for bank GL, but I also want my profit center label document should be balanced. Okay. In this scenario, you have to split your zero balance. Zero balance splitting. So in this way, what it will happen? What it will happen? So zero balancing, what it does, wherever there is no balance at profit center level, one GL we have to map in the backend, and that will come into debit and credit. So let me show you the example. So this vendor has PC1 has debit balance, but PC nowhere it is in credit. So what it will happen? One zero balance clearing GL will come. Okay, for this one, for this line item. Okay, it will become like this. Okay, now you can see profit center one and profit center debit, profit center credit 1000 rupees, 1000 matching. Now for this also one line item will come here. Okay, for this debit also one credit will come with 2000 rupees and with profit center 2. Okay, now PC1, PC2 level it is matching. Okay, now this one also This has debit, this has credit, but it doesn't have debit. So what will happen? One more zero balancing will come. Zero balance clearing. Okay, it will go debit for PC3. Okay, so this, it will split sometime in two also. It will split two. So 1000 and 2000. But now look at this. Now it is, if you see the zero balance clearing, at last it becomes zero balance because 3000 here and 3000 in credit. So it becomes zero. If you see at profit center level also, balance is matching. PC1 has 1000 debit, PC1 has 1000 credit. PC2 has 2000 debit, PC2 now 2 has credit. PC3 has 3000 credit and PC3 has 3000 credit. So in this way, now at profit center level it is matching. So these are total three scenarios generally we will get with the bank, especially for bank and cash GL. Scenario 1, so bank GL will get splitted based on what you have entered in the during the your invoice posting time. Scenario 2, they don't want to split the bank GL because they want to enter their own separate profit center. In that scenario, it will not allow you to split this bank GL. Third scenario, they want their own profit center, but they want also splitting. Okay, they want splitting. That time passive splitting will not work. If you want to give the different profit center, you have to activate the zero splitting. And zero splitting, what it does, wherever it is not matching the PC level, one GL, one line extra line item get inserted to match the overall document. So now let's see practically. So this is the, I'm not going more deep about what is active, passive, all those things configuration point of view. I'm going to only talk how we handle bank bank scenario, bank or cash GL scenario, especially when we go for new implementation. If you don't have all this knowledge, you'll never be able to implement the SAP. Okay, so let us see one by one. So this first scenario, let us test it. So let me post one invoice. Prior to that, make sure the document is splitting done at the profit center level, because I am trying to balance at PC level. So I have to make sure that at profit center level document splitting is activated. Come here. Here you have to see at what characteristic level. So PC level it is activated. Okay. Now come, for example, I want to give 8000. This is my GL purchase GL. This is my purchase GL. Here I want to give 3000 rupees, and this here I want to give 5000 rupees. Okay. Now here I want to assign one cost center, and here I want to assign another cost center. Let me simulate in ledger view. You can see that this is active splitting, because based on this my purchase, my vendor line item is getting split into two. Okay, so in this I have entered one cost center, which is this profit center, and another I have this profit center. So based on this vendor line item got splitted, okay, into two. Come back. If you want to see normal, you check, this is how journal entry will get posted in normal view. So purchase account debit, two line item, and then vendor account credit. Okay, if you go in the GL view, you go GL view, and then vendor line item will get splitted into two line item. This is my vendor line item got splitted into two line item. I'm talking about active splitting. So this part I'm talking, vendor line expense one in purchase two, and vendor got splitted based on my profit center. Okay, now save it. Oh, sorry. 5,000, 3,000. Copy center one, cost center one. Save it. Sorry, 3,000. Save it. So this is the document number got generated. Okay. This is the document number got generated. Now come here, see the report, FBL1N report. /n FBL1N 106261. This is my, what is my document number? 25. This is my document number got posted with 1000 rupees. Okay, 8,000 rupees got posted. Now let me make the payment. Scenario 1. Give here 8,000 rupees. Interior vendor. Select that line item 25. This is your invoice number 25. Now simulate it. Normal simulation if you do, then vendor account debit to bank account, normal. But if you go simulated GL view, you can see your bank GL is getting split in two line item based on your vendor line item. So this is your vendor line item. This is my reconciliation GL. This vendor line item 2. This is coming based on my posting, and my GL is also getting splitted in two, because in this line item this matching with this one and this matching with this one. Okay, this is first scenario. Scenario 1, where my bank GL is getting splitted, okay, based on my vendor profit center. So in vendor line item, this was the profit center and this was the profit center. Now based on this, my bank GL also getting split in two line item. This is the first scenario. Okay, post it. Oh, I should not have posted. I wanted to show you only. Okay, display it. If you want to see, you can see it. So entry view it will not show. You have to go into GL view. Then only you'll see the document splitting line items. Okay, this is the first line item. Now let me post one more invoice for second scenario. Here, let me take same 8,000 rupees, 3,000 rupees, 5,000 rupees. Give your profit center. To understand my classes, you need to have basic knowledge, otherwise you'll not be able to understand. Yes. Advanced level knowledge. Now I posted another invoice. Now my client is telling that I don't want that I want my own profit center to be defaulted for the bank GLs. They want their own profit center to be defaulted for the bank GLs. Okay. Now how to default it? Profit bank GLs, profit center for bank GL. You have to go to T code called FAGL 3KH. Come here, FAGL 3KEH. Come here, give your company code. Come here, give your bank GLs, okay, from which you are making the payment. So I am giving this profit center in my bank GLs other than what I have entered in the invoice posting time. So you can see during invoice posting time what I have entered: 27 GL view, profit center. Okay, so ATIN 1001 002. These are two profit center for two different line items. Okay, but here I am defaulting different profit center for my bank GLs. For these bank GLs, I want this profit center to be picked. Now let us make payment and check it how it behaves. Come here at that 53. Give here. This is my bank GL. You can check it here. This is my bank GL. This is my bank GL. Give here. Hit enter. Select your line item here. This is the invoice number. Simulate it. We do now normal simulation. Same bank. Vendor account debit to bank GL. Simulate in ledger view. You can see these two line item is coming. My vendor line item. My vendor line item is coming. But my bank GL is not getting split. My bank GL is not taking the profit center based on my invoice line item, but it is taking its own profit center which I have defaulted here. Okay, which but now here at profit center level it is not matching because profit center this has debit balance but credit balance it doesn't have. Profit center this has debit balance but credit balance doesn't have. This profit center has credit balance but debit balance it doesn't have. Okay, so here it is not matching. Okay, here it is not matching. Now this is one of the scenario. Few clients still accept this for bank and cash. Okay, we although tell them that it will not match at PC level, but they still accept it because that is their requirement. But now some client will not accept this solution. They will tell no, I want for my bank GL this profit center. At the same time, I want my PC level balance should also be balanced. Okay, I want for this PC I have credits, I want debit also. For this two I have debit balance, I want credit also. If that is the requirement, then you have to go for zero balance activation. What you have to go for zero balance? Add profit center, here one option is there, you have to tick this one. Save it. Save it. Save it. Come back. Then here define zero balance clearing account. You have to define that GL which has to pick in the line item. This is the one. You have to come here, give your chart of account 8000, and this is the GL I have created. You can create it a liability side. This should be the balance sheet GL, and you can assign here. Now let me make the payment. Observe the behavior, how it behaves. Come here. Let me check it here. 8000 here. Go inside. Deselect all the line item. Come select that invoice which you have. This is the line item. Simulate it. Observe it. It's taking time. Observe it here. See, when you not activated zero balancing, that time only this three line item has come. When you first activated this scenario, in this scenario, this was activated two times, the bank GL. When you defaulted this profit center, only three line item. When zero balancing, this four line item came additional. How it came? See, one for this came. You have debit balance. So for this profit center, one credit came here. See, credit minus came. This you have debit, one credit came. This one you have credit, so two line item got split into debit. Now if you see at profit center level, it is matching. So this profit center has credit 8,000, here 5,000, here 3,000. Okay, it's matching. This profit center has debit balance, so you'll have here credit balance. This profit center at debit balance, it has credit balance. Okay, so at profit center level, it is matching now. So this is the beauty of document splitting, and you need to be very, very careful while doing the document splitting for the bank and cash GLs. So one of the approach you have to adapt during your implementation time, either scenario 1 or scenario 2 or scenario 3, whichever is feasible for your client. Thank you so much for watching. Sorry, in fact, I have not no gone in very detail about the basic thing. My intention was only to teach how to deal with the bank GLs with respect to document splitting. I hope you understand these scenarios. Thank you so much for watching the video. Thanks a lot.